Hey everyone, it is Thursday, March 31st. Thanks for joining me on our IG Live segment. I'm Kim Hasserud. I am the National President of the USBG and also board member of the USBG National Charity Foundation. So I know it's that time of year, tax time. Nobody likes to think about it, but it's only a couple of weeks away, and I think it's time to be prepared for that. My guest is going to be a woman named Karen Tenenbaum. I want to get this right. Tenenbaum Law PC in New York. And their specialty is tax law. So we're going to have her on and we're going to talk about some of the hurdles and maybe if you do get audited, maybe some best next steps to take. But I'm going to, here she is. We're going to jump right into it because I think sometimes this is something that a lot of people ignore and it's best to jump on it. Hi, Karen.
Hi, thanks for having me, Kim.
Yeah, well, thanks for joining me. Well, let's just start. Kind of tell me a little bit about your tax firm and what you do and where you are.
Hi, so I'm a tax attorney in New York, and we handle IRS and New York State tax problems. So anytime you get any kind of notification that you're either being audited or that you owe money, you can
Yeah.
contact us and we can help you navigate the process.
Yeah. And I know everybody, it's a daunting process for everybody to do their taxes. But I think what scares me more is when you don't pay your taxes and you get that scary, letter in the mail or penalty. But when that does happen, what should be the first thing that you do?
Open that envelope, because if you don't open that envelope, things compound like you can't believe. You could start
Yeah.
owing a little amount of money, and then after interest and penalties accrue, you owe a lot of money. And
Yeah.
sometimes people come to us with a stack of envelopes that they haven't opened for years.
Yeah.
And then
And
the next thing you know, the government's taking money out of your bank account or your salary, and it
yeah.
could be a problem.
And just to kind of talk about that myth too, because it's not like, when someone gets divorced and they're served papers, like they try not to be there because it doesn't exist if they are not served. This is very different. I mean, regardless of whether you open that envelope or not, the clock is ticking and things are happening, right?
Absolutely. So the IRS could come after you for 10 years to collect, and New York State could come after you for 20 years. And certain
Wow.
liabilities are so personal that they don't go away in death or in bankruptcy.
Wow. Wow. So, okay. So you get the letter, you open it, and you're kind of freaked out. They're saying that you owe all this money. What should you do? I mean, should you try to kind of navigate this yourself? How should you go about dealing with the IRS?
Right. I would say it's probably best to get a professional involved, because a professional will know how to go through the system and will know the best alternatives that you have, whether you have to pay the full amount, whether you could negotiate something less, whether you could pay it over time, whether you could get rid of penalties. There are a number of things that if you don't do this on a regular basis, you don't even know it's an alternative.
Right. And I think that's really great advice. And I know you're specifically from New York State, and I definitely want to hear, some of your lessons learned and stories. And I think, even though federal is consistent state to state, there are different state tax laws that might be different, but I think it's important to contact a professional to help navigate that process. Because to your point, they can always negotiate, and that's always on the table is negotiation, right?
Right. So sometimes they start taking money out of your bank account or out of your salary. So let's talk about the differences, actually. So the IRS usually takes almost all of the money out of your salary, a wage garnishment, whereas New York State only takes 10% of your gross wages.
Okay.
And that's a big difference. You can't live on what the federal government will allow you to live on.
Yeah.
Um, Also, there are opportunities if they're taking money out of your, let's say you own a business and it's Friday payroll day, and they want to take money out of your bank account. It's an opportunity to call the government and say, listen, guys, keep us in business. We're going to give you some down payment, but don't take all of our money. We want to be able to stay afloat, pay our employees, and then pay you as well. So it is an opportunity to pick up the phone and contact the government. It's very hard these days to get in touch with the IRS. A lot
Yeah,
of
I bet.
people are still working remotely, but we have a lot of contacts and phone numbers, and it works.
Yeah. And I think it's a really positive thing to think about too, that some people think of the government as this big scary entity. They're going to come after you, and they will, but they're human, and they're also going to, that yes, they want their money, but they are willing to negotiate. They don't want to see someone necessarily out of business, and out on the street.
So certainly during COVID, the IRS actually came out with leniency initiatives to help people. But now I would say the government's getting back to being more aggressive. So, for example, New York State started taking more aggressive collection action right after Thanksgiving. And I got calls that month. So let's say Thursday was Thanksgiving. Friday, they started taking money out of the bank accounts. And that Monday, the phone took off. And it's been on that trajectory ever since. We've been having our busiest December, January, February, and March because the government's back in action. That's really what it is.
Yeah. All right. That's good to know. So, one thing too, I wanted to ask you, over the pandemic, a lot of people, pivoted and bought new businesses and went into something different. Different careers. If you bought a business and found out that they have a tax liability that you knew nothing about, are you liable for that?
Yes. So certainly in New York State, there's transferee liability for sales tax. And you also have to watch the payroll taxes as well. So New York State requires you 10 days before you get buy that business for the purchaser to file a bulk sale form with New York State, telling them about the transaction. And then it gives the state the opportunity to come in and say, here's how much the other owner owes. So the new entity will owe the money, and the individual owners will owe the money. And that sticks with you. So I have a great story. A fast food franchise started many years ago, and the original owner owed $50,000 in sales tax. Now, fast forward 19 years on a 20-year statute of limitations to collect. This is pre-COVID. New York State walks into the fast food franchise and says to the new owner, the old guy owed 50 grand, you owe 850 grand. And he said, how's that possible? I filed on time, I paid on time, I did everything right. And it turns out that if there was a bulk sale, there would be transferee liability. So that entity would owe the money and the individual would owe the money. And as I mentioned earlier, there are certain liabilities like this one that don't disappear in death or in bankruptcy. So what I said to the gentleman was, you have two options. One, you could hire me right now and fight it, and we could ask for a copy of the file from New York State. They're not going to have anything from 19 years ago, probably. They have the burden of proving that it was a bulk sale transfer. Or if you could keep them away from your bank account for another year, the 20-year statute of limitations will get rid of the warrants. Call me in a year and 2 weeks. And I always look on my phone. I have an app that searches all the warrants. And sure enough, they called me a year and 2 weeks later, and the warrant was gone. So sometimes there's you get lucky. You didn't know anything.
Yeah. Well, I think to your point, he got lucky, right?
Yeah.
But
that's story. I mean, I'll tell you a story where someone didn't get lucky. A gentleman was buying a business, knew that the prior owner had a liability, went to New York State and said, how much does he owe? They said $10,000. He wrote out a check, got a stamped receipt that it was received by New York State. It turns out he didn't do the bulk sale filing because he figured I paid, it's over, it's all done. And what do you think happened? New York State made a mistake. He didn't owe 10 grand, he owed 100 grand. And after the sale, New York State came back and said, new owner, you owe the difference, 90 grand. And they didn't care that he showed up originally and paid. So sometimes you don't get lucky. They said, this is a strict rule. You have to file with New York State. And what New York State really says is put the entire purchase price, the higher or the fair market value of the assets or the purchase price, in escrow. So if you pay the money to the seller and then you owe money, you're going to pay twice. Once to the seller and once to the government. So you want to put money in escrow so all of this is settled, and then money has to be paid. You pay it to the government. So recently, let's talk about the other side. We have a gentleman who owns an Italian restaurant. He had a sales tax audit in many years ago, 2014. That same year, he had a health problem and didn't focus on it. The liability grew, and now they're sending him collection notices again. And so he had to deal with it. He said, I'm 70 years old now. I don't want to deal with this anymore. I want to sell my business. And I said, you know what? The better thing to do is resolve the tax liability first. Let's do an offer in compromise with the government. Let's lower the number. Let's pay that. And then you could sell the business and reap all the benefits of the sales price. Otherwise, 100% of that money would go to the government.
That's exactly right. Wow. Yeah. And I think just little things like that, like having an expert kind of navigate you through that can save you hundreds of thousands of dollars in some cases. Yeah.
So, and I told you the story earlier. Someone in New York State had a sales tax audit, and penalties and interest were accruing. And they came to me with a very large liability. And I said to them, here's what you could do. You could either do it yourself or through me, try and get a penalty abatement, because the interest rate is different in New York State if you have a penalty versus not on sales tax. So it's 14% if you have a penalty, and it's 7.5% if you don't. And that could be significant. I saved this gentleman $75,000 just with that one tip. I'm sure if I looked at the paperwork, I'd find additional things.
Yeah. That's crazy. Do you find that people in the hospitality industry probably get audited more than other businesses?
So I don't know about the audits, but I can tell you about the collections. So if you look at the list in New York State of the top 250 entities and individuals who have warrants, 80% of them are restaurants.
Wow.
So, and I don't know if that's because, it's a low profit margin business. And so when they collect sales tax or the payroll taxes, which are considered trust funds for the government, it's not their money. They're supposed to pay it over to the government. But if you want to keep the business afloat, some people make a financial decision. I'm going to pay the landlord. I'm going to pay my employees. I'm going to pay my suppliers, and I'll worry about the tax situation later. And so that's what ends up happening. If you look at the top 250 lists, they're at the top.
Yeah. And they will, I know there was a local restaurant here in Arizona, and, it was a really well-known chef and mixologist, and they were only open a couple of months, didn't pay their taxes, and just got shut down. And, it's scary that they mean business. You gotta pay those state and federal taxes.
Now, to get a little specific, in New York State, you normally have the opportunity to come forward and say, I'm not the responsible person. So let's say you're the chief financial officer in the business, and you used to sign checks and you used to sign tax returns. Did you make those financial decisions? The government's going to come after you personally. So even if there are other people that are liable, they could come after you for the whole amount. Now, if you have what they call an LLC, a limited liability company, usually you would think you're limited because of the name, limited liability company. But it turns out in New York, there's strict liability. So let's say you're a celebrity in California and you want to be a 1% owner of a restaurant in New York because it's cool. You would think that you don't have to worry about what's going on in the business, but you do. Because if they owe sales tax, you could owe the full amount, 100% of it, in an LLC. However, New York State came first up with a policy, and then they changed the law that if you own 50%, less than 50%, you now could come forward and prove that you didn't have the responsibility, you didn't know about the financial situation, you didn't make those decisions, but you still will owe your pro rata share. So if you're a 30% owner, you're going to still owe 30% of the taxes, even though you came for the opening party and you never stepped foot in the restaurant again.
Wow.
So you really got to watch out.
Really got to know that stuff. So how would you say for someone that works in hospitality, how could you go about best preparing for an audit?
So we actually just recently did a presentation and wrote an article on this exact topic. Certainly you want to have proper representation. So if you don't have a person who knows what they're doing, you could end up owing even more. in the end, because they might open up to issues that they didn't originally think about.
Yeah.
It depends what you're being audited for. In New York State, for sales tax, you really want to have your books and records ready to go. You want to have looked through them. You want to make sure that they're adequate, because New York State will give you a penalty if they're not adequate, and they'll also use other methods. So they'll say, if it's a pizza parlor, they might say, how much flour did you order? And then do some kind of write-up. They might say, how much is the rent? And then they'll do some kind of calculation based on that. And sometimes those numbers are very wacky because they're not based in reality. They're just made up. And so you really want to show them, hey, here's what's taxable, here's what's not, here's what our sales were. You want to have accurate records.
Yeah. I think that's a good point too. When they do figure out those numbers, sometimes they're just making arbitrary decisions. When I lived in New York, I worked for a restaurant company, and the entire restaurant group got audited. I was a server at the time, and as a result, every single server and bartender person got audited, and they were making all kinds of assumptions, like, you made this much money, and I'm like, I'm just a college student. I wasn't even working. I got bad shifts, and they were saying that I made close to like $75,000, and I'm like, that's not even close. And so we actually had to go back and did some, we all kind of came together and went through an attorney. But you're right, they kind of make all kinds of assumptions across the board with everybody. And it's important to have someone, we had to pull out like our diaries and journals and saying, it rained this day, I didn't make that much, and these are the shifts that I had. But I think it's really important to have an expert kind of help navigate, because what ended up happening was some people were just too scared, and they ended up paying way more than they should have. And it also made other people, I think, look bad. Like, I know I'm not going to pay it. I don't owe it. I know I didn't make that much, and I stuck with it and ended up not having to pay that much. But yeah.
So
anyway.
you're talking probably, right, you're talking about your salary, but when it's a sales tax audit, sometimes they do an observation, and they usually pick the busiest day of the year, Mother's Day, and they sit outside or they sit inside, and they count every single thing that goes on to see if it's accurate, if your books and records are accurate. And then they do a subsection. They'll say, okay, based on this one day, and then they blow it up over 3 years. And so it's the busiest day, but what about the day before when no one was in the place?
Right.
Yeah. Or they count how many people were sitting at the table. Okay, that day there were large parties because it was the whole family, and normally it's a table for 4 and only 2 people show up, right? Yeah. So, but they do these calculations, and again, you want to go through the calculations and say, none of this makes sense. Listen, guys, and you work it out.
Yeah, I think that's really spot on. Well, gosh, man, I think this conversation was really good, and I think even though an audit and the IRS can be scary, I think it's good to know that they are human and they're willing to negotiate, and if you have an expert helping you navigate through that process, you can come to a happy ending.
And before you cut off, I want to say a few things. There are a lot of people who haven't filed; they're non-filers, and a lot of states have voluntary disclosure rules. So in New York State, for example, you could have a limited look-back period of 3 to 6 years with no penalties and no criminal prosecution. And so, and then on the federal level, depending on the type of tax, you would probably only go back the 6-year, it's a 6-year policy. So if you haven't filed for more than the 6 years, you're saving tax for those other years. So that's something that not everybody even knows about.
Yeah. Wow. Yeah. Good to know. Well,
I'm going to tell you a story. Okay. It's not restaurant related, but it's very interesting. So, an attorney didn't file tax returns for many years. Lovely family, happily married, grown kids. The oldest daughter graduates from college and says, "Mom, I want an apartment in the city. Could you co-sign the lease or guarantee the lease?" So she turns to her husband, and he's making a great living all these years. They're living a great life in a beautiful house. And she says, "Can I have a copy of the tax returns?" And he says, "Honey, I haven't filed. I haven't filed in years." And all of a sudden, you see their entire lives fall apart. She says, "My mother is 86 or 87 years old. She has a lot of money in a joint account with me, hundreds of thousands of dollars. He's going to owe about $1 million between federal and state." And she says, "Oh my God, if God forbid something happens to you, how am I going to afford to pay these taxes? Should I file a joint return? Should I divorce you. I mean, all these issues come up, and they're very personal. It becomes more than a tax issue. It becomes an emotional problem, not just financial.
Yeah, it becomes an emotional problem that affects generations, of the
That's
family.
right. So, well, we had them sign a conflict of interest letter, and we're helping them. So we're gonna be able to help both of them
Oh,
separately.
that's great. That's great. So Karen, for people that want to reach you, what is the best way to reach you if someone is experiencing an audit and needs some help navigating this?
Sure. So the firm is Tenenbaum Law PC in Melville, Long Island, New York. We're at litaxattorney.com. That's the website. And the phone number is 631-465-5000. And you can always email me at ktenenbaum, that's KTENENBAUM at litaxattorney.com.
Awesome. And I will include your in the description of this your handle too, so people can reach you kind of that way as well. But gosh,
Thank you. And anyone could call. We help everybody. We're here to help. Honestly, that's what we do.
okay.
I'm a CPA and an attorney, and we help. I'm doing this for 40 years, and we love to help people. That's what we're here to do.
Awesome. Well, thank you so much for joining me and kind of demystifying some of the IRS and tax issues people have. So I think when you have like a really realistic view of it, it's a good path forward.
So thank you so much for having me. This was wonderful.
Okay, thank you so much, Karen. Bye, everybody, and
Bye.
you'll be next week with Naomi on the IG Live.